Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been very good for the bulls. We had the best week since last year's November, almost 6% this week for the Nasdaq, and 5 green days in a row. And all this bullish price action was basically because we got inflation data in both Wednesdays and Thursdays, CPI and PPI. I'm not going to enter in too much detail today. I'm going to link right now both videos from Wednesday and Thursday in the upper right corner for you to have all the details for those days. We are going to overview the data in this video because CPI was in one line as expected. We got the month-over-month headline 0.2, and we got the core inflation rate year over year in line with expectations and the same as before. But I think the issue here is that the core inflation month over month uptick to 0.3 instead of the 0.2 consensus, and the headline inflation decreased from the 2.6 to 2.5. So we got 2 points of data pretty good, and then we got not bad data, but not as expected. Everyone wants to see continuation on the inflation going lower, because then we will have those those rate cuts. But along the lines with CPI, we got on Thursday, we got PPI. And PPI was quite a surprise because both data came in higher than expected. 0.2 in the PPI month over month, the consensus was 0.1 and the previous was 0. And the core PPI that came from negative minus 0.2 in the previous one came 0.3 and more than the 0.2 expected. So we have, in my opinion, two bad data that basically sparks the fears of the producer price index going higher and the CPI stabilization maybe upticking higher. So both these data increase the fears of a reinflation, at least in the short term. Finally, on Friday, we got the consumer sentiment preliminary for September, which came pretty good, 69, and inflation expectations came also in line. So this week, everything has revolved around the CPI and the PPI. And as I was saying, mixed data, CPI decent but not as expected, and PPI increased. So that's why we are seeing in the interest rate expectations, we are seeing again a turn back to the 50 basis points cut. This is 50-50 right now, but this right here, the 25, was 75% on Tuesday. So from 75, every analyst is now saying we need more cuts. The ECB, the European Commission Bank in Europe, cut interest rates again this week. And I think this is sparking a lot of fear, a lot of anxiety in the US because analysts continue thinking that the Federal Reserve is late in cutting rates. And they are again pricing in a 50 basis points. This is one of the reasons why, even though we push higher on the Nasdaq due to the CPI and the inflation data, on Friday we were like shopping, we tried to go higher, but now, this price action at the end of the week was not what I was expecting. And let's analyze everything in conjunction. We have to think about the fundamental side. We have to think about the technical, what the chart is telling us, and also the expectations if they are going to be met or not. Because we are again thinking about a 50 basis points, and those 50 basis points rate cuts came at the end of the week. we went from 60, 75 probabilities of a 25 to then sparking again 50 basis points expectations. And that's not good for the Nasdaq, for the technology companies. That's good for the Russell. And as we are going to see, the Russell had a pretty good week, and the RSP is skyrocketing. So we have to think about everything. First, we are going to analyze the Nasdaq, because the Nasdaq got a pretty big week of 4.3%. Excuse me, this is the Nasdaq. The Nasdaq got a 5.81%. The last time the Nasdaq got something similar was right here with 6% in November last year. And we pretty much recovered all the sell-off on the first week of September. So if we go to the monthly, we can see that this is August, this is September, and this is looking pretty bullish. It's looking insanely bullish on the month. A lot of buyers came in here to buy the dip. So the weekly, it's pretty much ultra bullish, and the daily is just, 5 days in a row going higher. Ooh, from Monday to Friday, closing at the highs. Things that are worth mentioning: we have a lot of liquidity here resting, and this is the major pivot that I'm watching. This is also a major pivot. And in lower time frames, in the 1 hour, look at all these. This is going to be beautiful. I told about this. I mentioned this in my Thursday videos. I'm going to link it right now again, because this level right here at 590, 600, 680 or something like that, there's a lot of resting liquidity, a lot of that, and we are slowly building up that position. We came from this was the breakaway gap on the 1 hour, then we bounced one time, and we are continuing pushing higher, and this is going to be one of my main targets for this week. All this liquidity, I wanted to be want the draw to be this one. So let's go into my marks, because I started the week basically quite bullish. We were pushing. I was watching this inverse fair value gap that we ran through. So remember, it's always the same. The price is fractal. The same thing that I want to see on the 15-minute chart and 1-minute chart to take trades, inverse fair value gaps being run through, is the same thing that happened on the daily. We ran through this inverse, we removed the inverse, and I was basically seeing wicks. I focused on wicks and gaps. This inverse fair value gap got also run through. We can remove the quadrants, can remove the inverse. As you can see, we left behind a lot of runaway gaps that I was waiting on Thursday to go deeper, but never got the opportunity. And then finally on Friday, I was watching this candle with these quadrants, and it was pretty much what I was looking for a trade. And I got the setup, but at the open was super choppy. As you can see, this was the 15-minute consequent encroachment, this line. And during the overnight, we were just holding. The first thing that I noticed is two huge divergences on the Nasdaq and ES. At the same time that the Nasdaq was doing lower highs here and lower lows here, the ES was pushing higher. We were taking higher highs here and higher lows here. So both SMTs and the liquidities being run, I was expecting a big push on the Nasdaq at open. And look at this liquidity that was being built. We were just building liquidity. We tapped pre-market low, we rejected, and then we tapped again. And this was my main zone of interest. The consequent encroachment of the week that I mentioned earlier. And I missed the opportunity. Why? Because I missed this opportunity down here. I took the order block because I quickly noticed that this was chop, chop, chop. We got this inverse, and the first fair value gap was the breakaway gap. The only, if you waited for the fair value gap to raise, to pull back, and then take the A plus setup that I usually take, you would have missed that. What I was trading is this order block. This order block was pretty decent on risk. It was only 9 points of risk for 4.5 almost risk reward ratio. So basically this order block, my risk was the week. Taking the assumption of this being a breakaway gap. If not, I would have been stopped, and then I would have taken the second setup on pullback on the fair value gap with the stop at the low of the candle. But I really assumed that this was a breakaway gap. This was pretty beautiful accumulation down here and then push. And my target was, look at this. I even have this notation here. All this is money. All these are stops. We got these, but my main target was pre-market highs. Market highs, the ES was already taking that. In pre-market highs on the ES was this. We were just pushing, choppy, but pushing, because the Russell and small caps were super strong. So the Nasdaq was lagging behind. And that's why I took the risk of letting the target be this for 41 points. It was pretty small trade, still 800s, and that's pretty good money for basically 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes work. It's all preparation that I would take every day, 400, 800 bucks every single day. Then I started to see something that I didn't like. Chop, more chop. This candle, the 10-hour candle on the Michigan Consumer Sentiment, established basically the range on the rest of the day. And as you can see, excuse me, as you can see, we just, if we extend the range of this, we were just bullish up here with these kind of nasty movements. But I mean, we failed to really continue higher. I had a lot of, let's go to the 15 minutes, because I had a lot of expectations on certain levels up here. The first one is pretty much the point of control from the bottom. There's a lot of interest in here, and we are seeing hesitation. We are seeing, I'm not seeing the same kind of move that we got, for example. This is the thing that I want. But we are hesitating. We hesitated on Thursday, we hesitated on Friday, and the thing is that this is the only market that hesitated. The ES and the small caps were creeping to the upside. 2.50 on the day for the Russell 2000, and the RSP being so strong is concerning when you compare it with the Nasdaq. So I will still be watching these kind of levels. Let's review them because they are pretty interesting. They all revolve around this inverse fair value gap and all these relative equal highs that are going to be hunted. I'm really sure we have this minor liquidity here at 644. but the main target is at 700. 700s are going to be my target for next week. And we have also this order block on the weekly. If we go quickly back, we have the only thing that I would like to take from the weekly is this order block. This order block is I think is not going to be played out, but still I wanted to take, I wanted to leave it in my charts, because even though this order block made this huge sell-off, we didn't have continuation lower. So let's see if it's bearish or not, or if we really have it as something that revolve around price action. But let's go back. So that's the order block that I have in here, the weekly. But if we start basically next week, if we start seeing bullish price action and we start taking, because this is going to be last week high, this week's high is going to be last week's high on Monday. And if we start pushing and we see higher lows in here and we start seeing some kind of bullish direction to the upside, to really see the weekly, we open the minor liquidity and we start attacking the 15-minute inverse. I mean, this level at 649. Pretty much, I want this trade. So that's my focus. It's pretty clear. It follows every ICT concept that it's available that I trade, and everyone will be watching here. I will not be the only one. I have to take care of my risk, but that's my target for next week. In terms of other markets, the dollar is still weak. As you can see, we cannot reclaim the daily. We are still second rejection, and it's obvious that the dollar is going to be weak, because as the currency of the US is going to be lower interest rates, and it's already in the recession call on the yields. It's still something that is happening. So we uninverted, we pull back, and we are continuing making a new high. So the bonds market, it's confirmed. They are falling a recession, not right now. This is a ticking bomb. This is a timer. Somewhere in the next 6 months, 8 months, 12 months, who knows? But the bonds market, it's confirming that the lower interest rates, the Fed policy, the 2-year yield is going to be crushed due to interest rates, and the 10-year, it's the one that needs to hold. This is the long term. This is the one that investors use to invest in US long term. This needs to hold. That's why the difference between them, the inverted yield curve, it's now pushing. So basically, the dollar is going to experiment to suffer a lot of weakness due to yields going lower and a recession at some point next year. But the investors and analysts are already moving. They are rotating into, they did that in here in summer, in July. We got the August or also a V-shaped reversal. And now we are seeing again momentum coming into the Russell 2000. Russell got a pretty good 4.30. So we can see how it's volatile, but it wants to move higher. And the RSP did something pretty good. This candle on Wednesday, this candle tapped the gap and then squeezed higher, and we closed the week up here. Look at the 3 indicators that I have: big momentum, big trend, and big long-term characteristic. So I'm really waiting to see how we develop during next week, because I think investors are super excited on rotating into small caps and into the equal weighted. Now that we have confirmed that the more and more the Nasdaq is going to be the weaker one because it 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 doesn't like lower interest rates because the tech stocks are going to suffer with the US being weak and the growth being not as much as before. So we have this wedge in here on the daily on the Nasdaq, but look at the ES. The ES is already hunting. The ES is way more to the upside. The ES is prepared to really go nuts into all-time highs, fueled by these small caps rotation. Banks are pretty good on Friday. Let's see on the XLF. XLF is trying to push higher, but one thing is true. In a lower interest rates and in a series of rate cuts, the banks are going to get really lower income interests. So why they are pushing, I don't exactly know, but I was surprised by seeing this kind of push. It's more of a hold instead of a push, but I would expect financials to go down. That way it's good because financials being strong supports the non-recessionary path moving forward. Consumer discretionary XLY strong. I think this is one of the reasons why they are pushing. And the ratio is still skewed to the downside. We had this range, we moved lower, but we are trying to push higher. I want to see XLY being strong. As long as I see this, I will continue thinking that the ES and the Nasdaq are moving forward, despite the fact that they will be super choppy. And semiconductors, look at this. Semiconductors are weak, but this week had a lot of strength, a lot of big buyers, because basically, yeah, was propelled to the upside. So that's everything. If you have to consider one thing for this week, please consider these levels. These these relative equal highs in between the inverse fair value gap and the point of control. These levels are going to be nuts. It's 588, 640, and 694. If we go to the 15, I would like to see the following. I don't want to see the Nasdaq entering again or even being lower this week or the consequent encroachment of the week of this week. I don't want to see this. What I would like to see is slowly the Nasdaq building some kind of strength towards the point of control, taking this high, which is going to be the weekly high. This is the weekly high. Monday, that would be last week high. And I want to see consolidation, perhaps attacking on Tuesday, Wednesday, the minor liquidity at 644 to finally move with maybe some kind of manipulation on the daily, move towards the 694. This is going to be my number one setup and my number one expectation. If we continue moving lower or we hesitate and we go below this level, the consequent encroachment on the 15-minute chart, that is going to ruin everything. This is my expectation. Let's see if we can get it. And that's all from my side. As always, if you found this weekly recap useful and you want to see more, please give them a like, subscribe to the channel. I do these weekly recap videos every Saturday to review everything from the fundamental side to the technical side and other markets from the week in a summarized version. But if you want to be informed every single day, I also have for Monday through Friday daily videos. I upload market forecasts, market updates, and market recaps every single day. So I'm on top of everything. You can have a lot of information in this channel. So if you are new, welcome. And if you are here from time to time, and you're a regular viewer and you're subscribed, thank you for the support. Thank you for the new subscribers. I do this for me, but I'm sharing this for you. This is exactly my charts. I trade with these charts, you know my setups, you know my key levels, and I hope that they are useful also for you. Do your own analysis and be prepared for next week, because I think next week is going to demonstrate, to show us how we are, if we are bullish, if we are truly bullish, or if we are going to fail on the Nasdaq. So have a nice weekend, rest a bit, try to disconnect from the charts, and remember that patience, discipline, and risk management are key for your success. Stay safe, everyone. Have a nice weekend, and see you on Monday.